Are you last minute scrambling for your tax, or would you prefer year-end planning? Follow my video and I'll explain more. Our goal is to help small business owners exactly like you. So if you're new, click the bell to not miss out on any of our new videos. So you tired of that annual tax panic on where it's not just after year end, it's like weeks or a couple of days before the tax deadline and you're punched in the face with a tax bill that you just was not expecting? How much of your time, how much of your energy does this take away on concentrating on the really cool things that you're doing within your business? If you're in this spot, follow my video and I'll explain more. Now, your tax is due around the same time every year if you're a limited company. It's 9 months after your year end. So you know that there's tax coming, but having to find an amount of tax within a day, 7 days or 2 weeks, and it feels a bit like a punch in the face, is gonna be savage. That will take your time and focus away as you're scrambling around for that money, away from looking and caring after your customers within your business or supporting your team. It's gonna lower your energy. So if you're really annoyed on this situation happening every year, you don't need to do it. Here's some tips that I've got for you. So number one is get your accounts done really early. So our aim for our customers here at MDH is to get the accounts done 3 months after the year end. I don't just mean started, I don't mean in a draft that's sitting in a black hole for 6 months. I mean signed, sealed, delivered, finished. This is my tax bill, this is what you got to pay. So even if you haven't been the most well disciplined, and you've got to a point of where you haven't saved up all the tax, you've got 6 months to prepare for it. So you can then either chip away at the bill, because HMRC pay fantastic rates of return on paying corporation tax early. Do not miss this trick. And this will allow you to get your tax paid. What damage is it going to do to your street cred with HMRC if you pay your tax early? I'll tell you, 0. Other ways to avoid tax traps is to basically make sure that all of your record keeping is in line. So if there's stuff that you pay for personally at your business, we all do it, but it is a genuine business expense, make sure that that's being claimed, because if not, you are going to be burning money. But if you're not well planned for your corporation tax, taking all the reliefs that are available to you, the other pain could be around your personal planning. So every year, you should be planning before the year end exactly what type of salary and dividends that you need to take to live the life you want. And there's no magic answer for this where someone goes, oh yeah, I only take £12,000 out of the business because it's tax free. Who wants to earn £1,000 a month? I know I certainly don't. So you may have different limits, which one could be 50,000, it could be 150,000, it could be 150. You need to balance up with what you need personally and what your personal goal is compared to the tax advice. Now, there are some things that will change, especially as tax rates change, because that has been bonkers in the current realm that we've lived in, but it also changed compared to your circumstances. So if you haven't got any big bills coming up personally, you've stopped paying school fees for your children, you might have paid for your house, you might not want to be taking the money out personally, you may want to be deflecting it into a pension. Pensions are super sexy in the current market because you're going to get tax relief as a company of between 19 and 25%, depending on how much profit you're making in 2024. But also the benefit about a pension is there's no tax going in. Amazing. So you can grow that pension even bigger without any tax on entry. Now, yes, I understand that you do pay tax on exit, but that's normally when you've got less total income, which means you can actually get, hopefully, most of it at the lower rate band rather than paying high rate tax. The one thing that really bugged me in the industry was the tax planning was always after the event. So you could be sitting there reviewing a set of accounts, you go, oh, if you'd have done this, if you'd done this, if you'd done this, if you'd done this, you could have saved this. And so you'd be sitting there at a meeting going, well, thanks for telling me that. So the only way that I can actually get this tax advice and grab it by the scruff of the neck is if I find my own DeLorean, which allows me to then go back in time to make that decision. So it's dead easy, just stop. On month 10 of your accounting year, look at see how well you're getting on, make sure that you're doing your remuneration planning in relation to them accounts and tax years, and make sure you are claiming every relief possible. Because there's nothing worse than not structuring your costs within your business at the right time. Classic example of this is buying equipment. So if you buy your equipment just before your year end, you'll get tax relief on it on that year rather than waiting another year. And the current rate for capital allowances is you get 100% in the first year. So if you need a van, if you need tools, if you need equipment, you need IT, you need tech, any type of assets, a really attractive time to buy it for your business is between month 9 and month 12. You will get the deduction off your profit, which will come straight off your corporation tax. This is happy days. Now, while I've said it's good to have a look at your bookkeeping to make the tax decisions, it's also good to make regular checks to go one step back. How good is the quality of the bookkeeping? Is it complete? Is it all on? Are there errors? Are there mistakes? Because what you don't want to be doing is looking at your scoreboard thinking, oh my God, the score is this, when it's actually that. So I would make sure that you've got periodic checks, that you're making sure that your bookkeeping is up to a good standard, because ultimately that is what you're going to be making decisions for your tax planning. So make sure it is slick. And what you want to do is continue to build tax strategies so they become commonplace. A lot of our clients, we send them out a video before the year end, which gives them tips, tricks and advice that can help them reduce tax. We also have our book that's called 70 plus ways to pay less tax. Dead easy. There's a download below. This is entirely free. Make sure that you're also looking from a financial services point of view, which could be looking at getting right insurances going for your business. So relevant life cover is an easy win. And also your pensions that are going through the business. So you're optimizing your tax to as legally possible. But make sure any of these decisions that you make around tax get you towards your business goals. Because if you're not doing that, you are completely failing. You may have questions that have come up after watching this video, and that's okay. So if I can help you, book a call. My calendar link's below. Let's jump on a discovery call. I'll answer any questions you've got, and I promise there'll be no pushy sales pitch. And if you're looking at further ways to save tax, download our book today. It's completely free. It's called 70 Plus Way to Pay Less Tax. The link is below. Enjoy.